In the ever-evolving world of automobiles, there's a buzz that's hard to ignore. Stellantis, the world's third-largest carmaker, is making waves with its plans for the Indian market. But what's the big news, and how might it shake up the stock market? Let's dive in. Alright, let's take a look at the news. Stellantis, previously known as Fiat Chrysler Automobile India, is contemplating a significant move. They're considering reintroducing the Fiat brand and launching other prestigious brands like Alfa Romeo in India. This comes after the company had previously halted its car production in the country due to slow sales and fierce competition from other brands. Now, why is this significant? The global performance of Fiat, one of the 14 brands under Stellantis, has been noteworthy. In the first half of the current year, Fiat outsold all other brands under Stellantis, with a whopping 645,000 cars sold globally. This marked a 10% year-on-year increase. Interestingly, almost half of these sales now come from outside Europe. The electric Fiat 500, in particular, has been a star performer, reigning as the top-selling hatch in its segment and making significant inroads in markets like Japan. Stellantis's strategy for India seems multi-pronged. While they're mulling over the reintroduction of Fiat and the potential launch of Alfa Romeo, their immediate focus is on establishing the Jeep and Citroen brands. The upcoming launch of the Citroen C3 Aircross SUV this October is a testament to that. This vehicle is set to compete with established names like the Hyundai Creta, Suzuki Grand Vitara, and Kia Seltos. Given the growing popularity of mid-size SUVs in India, this move could be a game-changer for Stellantis. But what does all this mean for the stock's value? The reintroduction of a brand like Fiat, coupled with the launch of other prestigious brands, signals Stellantis's commitment to the Indian market. Their global success, especially the impressive performance of Fiat, indicates a strong brand value and operational efficiency. If Stellantis can replicate even a fraction of their global success in India, it could lead to a significant boost in their stock value. Furthermore, the Indian automobile market is vast and diverse. The growing middle class, coupled with a penchant for SUVs, provides a ripe market for Stellantis's offerings. Their multi-brand strategy, targeting different segments of the market, could be a masterstroke, allowing them to cater to various consumer preferences and pockets. However, it's not all smooth sailing. The Indian market is fiercely competitive, with established players and new entrants vying for a piece of the pie. Stellantis's success will hinge on their ability to offer value to Indian consumers, both in terms of product quality and pricing. Their global success with electric vehicles, like the Fiat 500, could also play a pivotal role, given the Indian government's push for EVs. In conclusion, while challenges abound, the potential reintroduction of Fiat and the launch of brands like Alfa Romeo, combined with Stellantis's global success and strategic focus on the Indian market, paint a promising picture. If executed well, this could lead to a substantial increase in the stock's value. Now, let's talk numbers. For the upcoming trading session on August 14th, there are some critical surge signals to watch out for. On the upside, we have $19.26, $19.75, and $20.02. On the downside, the signals are $18.50, $18.23, and $17.74. But what do these numbers mean? Surge signals are price points that, when reached or breached, could confirm a directional move for the stock. If the stock approaches or surpasses the upward signals, it indicates a potential bullish trend, suggesting that the stock might continue to rise. Conversely, if the stock hits or drops below the downward signals, it could be a sign of a bearish trend, indicating potential declines. Given the positive news around Stellantis's plans for the Indian market, if the stock approaches the upward surge signals, it might gain momentum, pushing it further up. However, always approach trading with caution, as multiple factors can influence stock movements. That wraps up our deep dive into Stellantis's exciting plans for India and what it could mean for their stock. If you found this analysis insightful, do us a favor and hit that like button. And if you haven't already, subscribe for more in-depth analyses. Before you go, drop a comment below. Do you think Stellantis' multi-brand strategy for India is a masterstroke or a risky move? We'd love to hear your thoughts.